Well, here we are, 3/4 of the way through 2020. The coronavirus is still with us. The economy is still not fully open. And kids across the country are sort of back to school. The markets have staged an epic comeback. There's a sudden vacancy on the Supreme Court. There's unrest in the streets, and then there's an election. Before we get too far into this, I wanted to share some important reminders from our compliance team. These are here to help keep you informed. Please take a minute to read through this before we get started. It's no wonder U.S. satisfaction is the lowest it's been in 9 years. As the third quarter began, we began to see some of the momentum we saw in May and June as the country began to reopen. We closed the second quarter with GDP down 31.4%. Coronavirus cases spiked. Business and communities shut down. Those who were fortunate enough to stay employed navigated the new work-from-home environment. While that GDP number may be very depressing and show that we've entered into a recession, that's not really a surprise to anyone given the first half of 2020. But there is hope. In fact, the estimates of third quarter GDP growth are currently ranging from a plus 20 to a plus 35%. Monthly job creation has been robust, with over 3.8 million jobs added back to payrolls in Q3. And more than 10 million jobs have been added back to payroll May through August, a definite positive sign for our economy. Following the 4th of July, we saw an increase in coronavirus cases as a second wave of the virus spread across our country. And it was expected to derail the recovery. But thankfully, the case numbers were not as bad as feared. Testing was more widespread, and people seemed to be doing the basics to stay safe by the way of wearing masks, social distancing, and self-quarantining when they had coronavirus symptoms. We are still very far away from what most of us would consider normal by pre-coronavirus standards. We've seen good progress despite many large metropolitan areas remaining mostly in lockdown or still only partially reopened. This progress showed up in Q3 with new records in the S&P 500 and the NASDAQ. Now, to top everything off, the election will be quickly upon us. And as we get closer to November 3rd and its aftermath, volatility is likely to become more pronounced. But one thing is for sure. As we enter the final quarter of the year, my first and foremost thought is to be cautious. If you are a long-term investor and are comfortable with your plan, stay put and continue your journey. If, however, the past 9 months have been too tempestuous for you, if you feel anxious or stressed regarding the markets, and your portfolios, get with us ASAP. Let's talk about how you're feeling, your goals, your plans and needs. Let's have you do a risk tolerance assessment or update the one you already have on file with us so we can evaluate if your plan is still appropriate for you or if there are updates needed. Before we close out today, there are a few things to be on the lookout for as we move into the fourth quarter. Number 1, will we get a vaccine? Number 2, how will the election play itself out? Number 3, will we reverse course in our recovery efforts? And number 4, will Congress pass much needed relief? With that, onward into 2020.